For today is about cash and cash equivalent receivables or receivables part 1. So what is cash? So from the point of view of layman's term, cash simply means money. So money is a standard medium of exchange in business transactions. So it refers to the currency and coins which are in circulation and legal tender. So here our currency in the Philippines is peso. In United States is dollar. In UAE it's dirhams. In other country like Saudi is Saudi Riyal, pounds in Switzerland or sterling pounds. Cash includes money and any other negotiable instrument that is payable in money and acceptable by the bank for deposit and immediate credit. So unrestricted cash is an entity shall classify an asset as current when the asset is cash or a cash equivalent unless it is restricted from being exchanged or used to settle a liability for at least 12 months after the end of the reporting period. Accordingly, to be reported as cash, an item must be unrestricted in use. So the following cash items are included in cash. Cash on hand, this includes undeposited cash collections and other cash items awaiting deposits, such as customers' checks, cashier or manager's checks, traveler's checks, bank drafts, or money order. The following cash items are included in cash. Cash in banks. This includes demand deposit or checking account and saving deposits, which are unrestricted as to withdrawals. The following cash items are included in cash as cash funds, set aside for current purposes such as petty cash fund, payroll fund, and dividend fund. Cash equivalents or a short-term and highly liquid investment that are readily convertible into cash and so near their maturity that they present significant risk of changes in value because of changes in interest rates. The standard further states that only highly liquid investments that are acquired 3 months before maturity can qualify as cash equivalents. Example of cash equivalents are 3 months BSP Treasury bill, 3-year BSP Treasury bill purchase, 3 months before the date of maturity, 3 months time deposit, 3-month money market instrument. So equity securities cannot qualify as cash equivalent because shares do not have a maturity rate. So cash equivalents is like I remember this it's but if you can see in the SM yung SM gift check. So it's like, but SM gift check is just like a small like check siya. While the other one is it's like certificate, have a certificate that it will be you must get it within 3 months kasi pag after 3 months na siya sa banks mo siya ipapa-convert because if after 3 months na maglapse na siya it has an expirations. So that is the equity securities or cash equivalent. Valuation of cash. Cash is valued at face value. Cash in foreign currency is valued at the current exchange rate. Like what I was saying a while ago, that like in dollars, the conversion of dollars into peso is, I think now around 48 peso, 49 peso. While in dirhams naman, before it's running 13 or 14 peso in peso. The 1 dirham is equivalent of 13 pesos or 14 pesos. If a bank or financial institution holding the funds of the company is in bankruptcy or financial difficulty, cash should be written down to estimate realized value if the amount recoverable is estimated lower than the face value. While financial statement presentation, the caption cash and cash equivalent should be shown as the first item among the current assets. The caption includes all cash items such as cash on hand, cash in bank, petty cash fund, and cash equivalents, which are restricted and used for current operations. The cash and cash equivalents should be disclosed in the notes of financial statement. While investment of excess cash, such investment in time deposit, money market instrument, and treasury bills should be classified as follows. If the term is 3 months or less, such instruments are classified as cash and therefore included in the caption and cash equivalents. So investment of excess cash, if term is more than 3 months, but within 1 year, such investments are classified as short-term financial assets or temporary investment and presented separately as current assets. Recognition and measurement of cash receivables. Cash is generally measured at face value, which is its fair value. The caption cash and cash equivalent should be shown as the first item among the current assets. While foreign currency, it is an unrestricted, then it should be translated to Philippine currency using the exchange rate at the end of the reporting period. So I was saying a while ago, along with our discussion of the currency equivalent into peso. However, if it is restricted as to withdrawal, then it should be reported as non-current assets. For consideration in reporting cash balance in the balance sheet, cash cash in closed banks or in banks having financial difficulty or in bankruptcy, it should be reclassified as receivables and should be written down to its recoverable amount. Consideration in reporting cash balance in the balance sheet, customers post-dated checks and SF or no sufficient funds checks or IUs, they should be reported as receivables rather than cash. NSF check in the Philippines are often described as daif or drawn against insufficient funds and drawn against unclear deposit checks. Like for example, class, nag-issue ka ng check for payment on your one suppliers, cost of 5,000. So you forgot, or sometimes there is a deduction of under, kumbaga, below maintaining balance ka, nag-deduct sila ng 300 pesos. So ang nangyari, 4,008 na lang yung pera mo dun sa banks. Dineposito ng suppliers mo ang check na in-issue mo. And at the same time, on that certain debt, dun din nag-deduct yung bank ng 300 pesos for the below maintaining balance. So, naging, for example, 4,700 na lang. So, 5,000 ang papasok. So, even though it's 300, sabihin mo, miss, 300 lang naman, bakit ganon ang nangyari? So, hindi pwede class because it will fall in the if or drawn against insufficient funds. Kahit piso lang yung class, you have to know your obligations in the banks if you are having a checking account that you have to maintain or to check always the issuance you have in your suppliers or whoever you are issuing for your checking account. So considerations in reporting cash balance in the balance sheet, postage stamps and expense advances. They are not cash, but they are reported as prepaid expenses. Bank overdraft when the cash in bank account has a credit balance and it is paid to be an overdraft. Consideration in reporting cash balance in the balance sheet and deliver or analyst checks are company's checks which has been recorded as issued and delivered to payee before or at the end of the reporting period should be reverted to cash and the corresponding liability shall continue to be recognized. Considerations in reporting cash balance in the balance sheet, company's post-dated checks are the company's check drawn and recorded as disbursed but are not actually issued or delivered to the payees as of the reporting date. This check should not be deducted from the company's cash balance, take note of this class, until they have been mailed or otherwise delivered. Compensation balance are minimum amounts that a company agrees to maintain in a bank checking account as support of collateral for a loan by the depositor. Not legally restricted, the amount is reported as part of cash. The nature of the arrangement is disclosed in the notes of the financial statements. Legally restricted, the amount should be classified separately either as current assets or non-current assets, depending on the nature of the loan. While consideration in reporting cash balance in the balance sheet, cash set aside for long-term specific purpose or acquisition of a non-current assets, bonding or bond sinking fund and planned expansion fund, reported as non-current assets. Stale check or check long outstanding is a check not in cash by the pay within 6 months from the time of issuance. For now, class, I think some of the companies, they are getting it 3 months for stale check. Like for example, nag-issue ka ng cheque, you dated on tomorrow, October 20. So hindi ito na in cash, or sometimes it will be safe keep only for the purpose of securities, na pwede ka mapautang ng, pwede kita mapautang if you are the one who is supplying, or vice versa, for safekeep, but that check will be renewed if it's that, so if it is that safekeep will be renewed after 3 months or 6 months before it will be stale. Or either way, nag-issue ako ng cheque sa'yo, hindi na deposit na yung suppliers, within 3 months na nalimutan niya, yung date mo is October 20, or nalimutan niya, it will be stale after 3 months. Hindi na pwede yon. So you have to issue another again. Either you get that check that you issued on your in your issuance, and you replace it on another one. The statement of cash flows of operating activities. These are principal revenue producing activities of the enterprise. Cash receipts from sales of goods or rendering services, cash receipts from royalties, fees, commissions, or other revenue, cash payments to suppliers of goods and services, cash payments to and on behalf of employees. Statement of cash flows from operating activities, direct method. In this method, gross receipts and gross payments of cash are disclosed. In direct method, in this method, profit and loss accounts is adjusted for the effects of transaction of non-cash nature. For the statement of cash flows, investment activities, the activities of acquisition and disposal of long-term assets and other investment not included in cash equivalents are investing activities, like cash payments to acquire fixed assets, cash receipts from disposal of fixed assets, cash receipts from disposal of above investment, cash payment to acquire shares, warrants. And statement of cash flow financing activities, those activities that result in changes in size and composition of owners' capital and borrowing of the organization. Sale of share, buyback of share, redemption of preferences shares, issue or redemption of debentures, long-term loan, payment thereof, dividend, interest paid. Benefit of cash flow information. Cash flow information is useful in assessing the ability of the entity to generate cash and cash equivalents, enables user to develop models to assess and compare the present value of the future cash flows of different entities. Benefits of cash flow information. It provides information that enables user to evaluate changes in net assets of an entity and its financial structure, including its liquidity and solvency. While the benefits of cash flow information, its ability to affect the amounts and timing of cash flows in order to adapt to changing circumstances and opportunities. So enhances also the comparability of the reporting of operating performance by different entities. Receivables, or the term receivables refers to amounts due from individuals and companies, claims that are expected to be collected in cash. Receivables represents one of the company's most liquid assets. Receivables are recorded if a condition for revenue recognition are met, but cash inflow has not yet occurred, while the trade receivables, which are expected to be realized in cash within the normal operating cycle, are 1 year, whichever is longer, as I discussed already in the previous slides, whichever is longer, are classified as current assets within 1 year. While amounts owed inutang sa'yo, by customers for goods sold and services rendered. Classification of receivables non-trade, which are expected to be realized within 1 year, the length of the operating cycle, notwithstanding, are classified as current assets if collectible beyond 1 year. So over na siya, class, or non-trade receivables are classified as non-current assets. I already give an example of this. Accounts receivables, amounts owed by customers on account. So inutang ng customer sa'yo. Results from the sale of goods and services, or often called trade receivables. expected to be collected within 30 to 60 days. The usual thing on accounts receivable. Plus, kung yung inutang ng customer sa iyo, 1,000, bibigyan mo siya ng 60 days, just kung ano na lang yung kita mo doon. So, usually, the most significant type of claim held by a company. For the notes receivables represents claim for which formal instrument of credit are issued as evidence of debt. Credit instrument normally requires payment of interest and extends for time period of 60 to 90 days or longer. May result from sales of goods and services or often called trade receivables. For the recognition of accounts receivables for a service organization, a receivables is recorded when service is provided on account. Merchandisers record accounts receivables at the point of sales of merchandise on account. Entry is recorded to increase both sales and accounts receivables, while receivables may be reduced by sales discount or sales return. So that ends our class discussion for today's